how you can think outside of the box to outsmart their manipulation. All right. If you want to see how the creation of the market has been instigated for a retail trader to basically bite on the trap, I'll show you here in a second. So this is the day, gentlemen. The account is still growing. We are currently at 187 and 860, whatever. You have to bear in mind something. Last 2 weeks ago, we were at 183-ish. So we doubled the account, a little bit more than the double. Do you understand that the day we're gonna have $10,000-$15,000 profit, we could do the same thing without any risk, easy peasy, done deal. And I'll give you the reason why you can do this easy peasy. It's because I have impetuous way of having an incredible risk to ratio, 16-1 today. Do you understand? 16-1 is basically risking, I don't know, $100 to make 1,600, $1,000 to make 16,000. That day is coming, my friend. Bear in mind, it's a question of time. So until then, let's keep enjoying this free educational videos that I'm doing. Does that necessarily mean that I'm going to charge them? Nah, I don't want to charge those videos because I want to give you guys as much as free content to finally find the gems in between you guys so that you can finally come into our army. We call this the war room, and then eventually have a vision where we're going to create this beautiful solid team, and then I'm not going to say too much. Okay, so don't forget to like, subscribe, and also comment. I swear to God, if you keep watching those videos and you're not subscribing, anyway, subscribe. That being said, we had this beautiful descent going on. What's going on here? Well, first and foremost, profit taking. Okay, we're in a profit taking mode, but more importantly, a beautiful news that I got in the beginning, this weekend, I think end of weekend-ish, that US tariff and European Union has been eased. That's all I needed to know. Why? Well, you have to bear in mind that we're coming from prices that were quite low. I don't remember exactly the price, but we were quite low. From the day Trump announced this, it went a rabbit hole to go all the way back bullish. All I needed to know is that he will ease, even if the tension between the tariffs are not congruent. All I needed to know is they're ready to negotiate. Well, we knew they were ready to negotiate, but it's actually happening. So that's beautiful. Then afterward, my partner also sent something which actually prompted the confidence upon the fact that I could hold my trade. But anyway, I was already in the trade, and that is a headline that came that said the US federal court blocked Trump Liberation Day tariffs from going into effect. Ooh. But you see, the problem is that the headline came right after their descent. Interesting, isn't it? So anyway, without further ado, let's dive into it. What happened exactly? We had a beautiful descent from 33.47, so they went pretty aggressive. It's interesting the way they've done it. They had a gap as well. So Sunday open, a gap. What does it mean exactly? A gap doesn't mean shit, but more importantly, it's being used, historically speaking, to trap many players in this game. So thinking that when there's a gap, there's a continuation. Usually when there's a gap, it can go the other way around. So we're not going to take this into consideration. But knowing the information that we knew that there's the tariff into effect, and also we're getting close. We touched the 78.60. Okay, there's not much fundamental news that is pointing for it to go all the way back up for all-time high, because after this movement, if they were to keep going back up toward 85, 88, well, the message is we're going to go back either doing a double top or a all-time high, which is not the case. Why would they? You know, like, well, yeah, you get my point. Fundamentally speaking, there was nothing. So they started to, we have to also take into consideration, we're getting at the end of the month. End of the month, you know, if you have a portfolio, you just want to, well, end of quarter, end of the month, you want to make sure to sell off to get back your money, especially if there's no much reasoning into the market for it to go bullish. Okay, you have to take that into consideration. Okay, so we have this. We also had the situation with the fiscal policy. So that also prompted the DXY to go back above 100, which is pretty good for the US dollar. But for the gold, it's a different story. So we have all this information. Now, you put your Fibonacci, pretty simple, classically speaking, you put it all the way back to actually here, down there. Yeah, it was all messed up here, so let me just put it back right there. Okay, classic Fibonacci, nothing too fancy. We put this one, and what we get here is we get some liquidity on the making. Okay, so we, on Tuesday, New York session, they started to grab liquidity on both ways. Then eventually went all the way back up to 33.15, came back down. Pretty odd, pretty interesting price action. From there on, I knew something was not right. I mean, for them to push all the way back down toward the next take profit area, which was the 62, I mean, more specifically 63, something like that, below this here, the minus 27. And I just knew that was the take profit, but why would they push on on a Wednesday before the job market, which we don't have yet the data? Okay, doesn't make sense, especially the timing. Everything was not congruent. And afterward, they went all the way back up, touched the 50% very cleanly, and that was at 33.25. From there on, it was pretty skeptical. You know, we were all searching. I mean, me and my partner were searching for the best price for this. I called it the Hall of Fame trade. Reason being is because I knew it would have gone back down toward 63. Now, just calculate how many pips we could have done from here to here, and you would see that this was basically a Hall of Fame trade. We're talking about 600 pips. 600 pips, one single trade. It could have lasted less than a half a day, and this would have been a clean, beautiful trade. Did not happen, unfortunately. Had a hard time to catch the momentum here. It was quite special, to be honest. Being live on the market, I mean, the market has a very special ability to change their behavior, so you have to adapt yourself. And unfortunately, it's not always linear. So this is what we've seen. They started to go down pretty slowly, and that was interesting. They went down slowly, finally go back down toward 89. So you have to bear in mind that we have a pretty strong, solid resistance. So we have a lot of positioning from the 22nd of May, a lot of positioning from the 27th of May. So we have a lot of positioning that is being held, protected it. So for them to break it, well, it takes a lot, right? They started to go all the way back up here to 33.02, okay? So we're gonna put one other classic Fibonacci. I'm gonna put it from here to here. And we have 38.20%, around 250-ish, 3. Pretty late, very late. Now, what I want to show you guys here, this is what's interesting. Let's remove this, and let's remove this. We were here. I think it was around here. I took one long, took small stop loss of like 35 pips. No shame to tell you guys, it's part of the game. We wanted to take one filler trade to get actually the main course, because I could not believe that they had what it takes for them to push the price all the way back lower. Why? Well, remember, gentlemen, what you know is based on your memory, and your memory is based on what you have already experienced. I've been there 5 years in the game. I've seen pretty much everything. Let's be honest, 2 years I would say meticulously on gold market, and the rest were in forex market. So I've seen what I've seen, and I've never seen what I just saw. Okay, so you have to understand that the market changes. Creators of the game, they know what they do. Okay, there's a lot of thing going on behind the curtain that most of you don't know, but it's okay. It's better like this. It's yeah. So here's the interesting thing I want to tell you guys. So the 38.20%, then they push the price, touch exactly the price of 76.5. Very interesting price. Let's do something together here. And this is where I was like, got it. So first and foremost, we have the narrative. Second thing, we go on a 4-hour. And what got me to really have the actual confidence to push the price right at the market open, it was this right here. It closed on top of the moving average, the 4-hour moving average. So you're in front of the screen, what would you think, right? Having a huge resistance here. Well, my first instinct is basically to buy. Why? Because it closed above the moving average. But yeah, it was made on purpose. I just had it in my gut feeling. This was this. And then afterward, the market opened at 6 p.m. Eastern time. And this is what we got. So this beautiful push right here. It's 6:05. Usually you don't take trade at that time. So you get simply, I think I was on a lower time frame, so I was on a minute. Take it from this one. Oh, right there. So you see, they went and touched. So we have few confluences. You do have your moving average, you have a resistance, you have the 88.60, you have like a triple top right here, and then they start pushing the price all the way back down. So the risk to reward, it was incredible. 16-1. So I had a level around 94, and the price was like this, so like 30 pips ish, like that, and the take profit was all the way back down to 13. And 16-1, so maybe it was a bit above like 0.5. There we go. That was it. This was basically the trade. 16-1, and the reason is it was right on top of that 100% of the Fibonacci's, and as well as, well, you have all the confluences, you have the confirmation of the what's it called, the candlesticks, and many more confluences, but overall you get the point. Now afterward, they just pushed the price, and on my different accounts I added more position around here and a little bit here to finally go all the way back down to 63 right here, more specifically right here. 63 was the take profit, and voila, that was it. A beautiful trade. And yeah, pretty proud of this one, because this one took for me to really understand the fundamental perspective, what's going on. Second thing is that I linked the whole narrative of what's going on exactly and what we're seeing basically. Third thing, well, obviously we need to work on the timing. Fourth, we had the confirmation, we just held down. Fifth, I took one noble loss, doesn't matter, very proud of it. Why? It's because I went with what I knew, but then also I had a small little risk, a great risk to ratio. Noble loss because we would have had a beautiful combination. Fifth, from the beginning of the week, we had the thesis, the bias was shorting around this specific price. Well, you saw that they went a lot more lower. We had it. The thing is that we want to get out, and then if they have another retracement, get back in freshly, but did not happen. So it is what it is. Anyway, without further ado, hopefully this was insightful. You have to understand that you need to have perspicacity, you need to think differently, you need to think outside of the box, and this only happens with time, energy, or you can join us and then see our perspective, learn from us. I've lost tons of fucking money in my beginning of my years. All of this experience, you can get it basically for peanuts, man. I don't know what's the price of our, I don't know, $50, $60. Come on, guys. Come on. You guys would be smart. Listen, if I would be you and you're not in our Discord community, honestly speaking, I don't even think that you have what it takes for you to become a trader. You need to have a different way of thinking. If you're handling down too much on your money, well, then you're going to spend time and energy. And if you want to spend time and energy, go and knock yourself, because you will lose money. Because the inherent nature of trading is money. The byproduct's money. If you make mistakes, you do lose money. So you will really understand that you're basically not winning money. You're basically losing time, energy, and money. Make the math. I'll see you guys next time. God bless you all, and make a lot of pips.